Hey, big announcement from FINRA today that's going to affect all retail traders, especially noobs, but almost everybody. So this is big news. You're going to want to stay tuned to the end to find out all the details and how you may be able to benefit from this. This is FUBAR trading.
Oh no, not again.
I teach trading tools and techniques without any BS. So FINRA's big announcement was on the PDT, that's the pattern day trading rule. And it basically says that you can't have a margin account or make more than 5 trades in a week without having at least $25,000 in your account. Things that are allowable outside of that are you could either, that only applies to equities. You can trade other instruments such as futures, and that rule does not apply. You can have a cash account, and then there's no minimum, but you also don't have margin. So it's a cash account as opposed to margin, and you still can't short. You don't have any leverage, but you'll be able to trade as much as you want and not be subject to the 5 trades per week. And another one that some people do, I wasn't comfortable with it. I feel it's a bit dodgy, is you can go with an offshore brokerage that doesn't have these rules. It's subject to US brokerages only, so I just wasn't comfortable doing that myself. Now, why would you want a margin account? To me, the biggest limitation with a cash account is not being able to short or sell and bet that instrument's going to go down in price. And but also margin. Some people like to trade with margin, and that means like with the 25,000 minimum, you'd be able to trade up, buy or sell up to 100,000, like 4 times leverage in some brokerages. So it's a lot riskier that way. I wasn't so much interested in the margin other than for futures, I suppose, but it was more about the not being able to short. It was just limiting. And if you're day trading, of course, you're gonna usually want to make more than 5 trades in a week. You're often doing a few a day, but it really depends on your style and stuff like that. So regarding this new FINRA announcement, it was on around September 24th, I think, of 2025 here. And the SEC still has to approve it, but it sounds like it'll probably go through from what experts are saying. Of course, now I'm losing my voice. But with that PDT, they're talking about instead of a $25,000 account minimum, it would be $2,000. Again, it only applies to equity accounts, not futures or other instruments. It does not apply to forex, trading currency on the foreign exchange. And of course, that's the account minimum before you're not allowed then to trade. So you'd want a buffer if you have, allow for a couple of days losses. So whatever your daily allowable loss that you have for your risk, you'd want to be able to, sustain a few losses and still not go under that minimum. So just keep that in mind, even on a $2,000 account, that you'd want to have a buffer on top of that. So if you have any questions, just put them below in the comments and let me know if that's a good thing or a bad thing in the comments. If you think, some people think it's only going to benefit the big institutional players and it's going to screw over a lot of retail traders. I don't think it's necessarily a bad thing. Definitely beginners, again, this is a very risky endeavor in general, just trading and day trading, even investing in general. So I can't make any official or any unofficial financial advice or recommendations, of course, but just let you know that it's very risky and that I do like the extra flexibility of being able to short on trades. But, for beginners, the reason that's more risky is if you're shorting, of course, if it goes against you, it means the price is going up, the equities could skyrocket, and you have essentially unlimited downside if you're shorting and it goes against you, as opposed to when you buy an equity, then if it could really just go to zero, it can't go to negative. So there's like a finite amount that you could lose. But I mean, if you're buying throwing all your money in several shares or hundreds of shares of a $20 stock and it goes to zero, I mean, you're still going to be pretty screwed. So just do the math and know your risk and all that sort of thing. I'm not here claiming to be a market wizard. I'm actively learning, testing, and refining my approach every day. I share what actually works for me in real trades and cut out the fluff so you can learn alongside me. I'm wired to spot patterns and focus on facts, not hype. That's the lens I bring to trading. None of my content on this or any platform is financial advice, and day trading is very risky.
Oh no, not again.